Welcome back, and joining us now is Surendra Mehta. He is the Secretary, India Bullion and Jewellers Association. Mr. Mehta, hi, thank you for joining in. And there seems to be a bit of a calm right now in the international markets. It's a risk-on trade, more trade agreements are happening, and the geopolitical tensions also seem to have taken a backseat, at least for now. And that is the reason you're looking at the gold prices very, very consolidating within a range there. Interestingly, having said that, we haven't seen the prices go below 3,200 or so. In the current kind of a scenario, what's your sense on where really could the gold prices go?
To understand one important thing, that after the geopolitical tensions have reduced, the new thing which is coming next week, especially for India, is the tariff deal. So as far as India is concerned, Indian gold market is concerned, I suggest all traders to remain very, very careful, because this tariff deal can finally end up having gold import from USA in a bulk quantity. And currently we are having 45 billion trade deficit with USA, and probably the entire game is not only about the trade deal or a tariff deal or a gold deal, but it is about the currency. So the currency is likely to become very, very volatile. And I think that is the reason why the market, India being one of the major importer for gold, the market is slightly calm and moving in the same range. There can be a deal with the USA, wherein USA may like to export gold to India, and with a preference, because currently we have a preference of import of gold from Dubai, wherein we pay only 5% duty against the normal duty of 6%. But if the preference is to be given to USA, then probably we'll have to go for further duty cut if we import from USA. So I would suggest all traders to, this calm market is actually a good for them, and not to carry over the trade for the next week at least.
All right, that's a cautious voice coming in. And but what's your sense on the prices itself? Because that takes in way more than just the US and India trade agreement, clearly, way more fundamentals and factors within that. How are you looking at the prices from here on?
Yeah, prices in the international market, I'm still very, very bullish because the prices are not going below 3,200 level, as you rightly said. It's almost moving in the similar direction how the silver moved. Silver were consolidating between $32 to $34, and we suddenly saw a surge in silver prices to $37. Something similar is likely to happen here, because there are non-farm payroll data. The US is likely to get into recession. There can be an interest rate cut. And all these factors, only one factor has reduced, that is the geopolitical tension, but other factors remain as it is. So in my opinion, I'm still very bullish on gold. It may cross $3,700 to $3,800 maybe in next 1 or 2 months.
Also, how would you look at the Indian demand now? We've all been waiting for a consolidation. We all understand that the last month or the last quarter wasn't such a great one. Again, most jewelers have come around and told us that the demand or the sales has been 40, 50, even 60% down for some of them. Do you see that improve as we go ahead?
Yeah, especially after the gold price crossed 1 lakh mark in the Indian market. Let me tell you, from the first week of June, the demand is on the retail counters are nearly down by 70%. And I think the Indian consumers are not able to digest the gold prices above 1 lakh rupees. And if this remains the story and whatever I think that gold prices are likely to go higher, it is going to be the tough quarter with all the festival season in the next quarter. I think Indian jewelry sector is going to have a difficult times in the next quarter.
Okay, could see a difficult time in this quarter, though prices could go up, is what is the word coming in from Mr. Surendra Mehta. Thank you so much, Manisha, as well as Mr. Mehta, for joining in with us for this interesting conversation there. But with that, we'll actually step into a very short break. We'll get you more on the markets and stock-specific action on the other side.